Hello and welcome to the Real Estate Regroup Show. I am your host, LJ Walker. So, guys, I found myself in a little bit of a dilemma. Here's the situation. There's a deal going on where basically I would be investing in laundromats with a group of people. There is a minimum to invest with this particular group. So I wanted to use my IRA money, my self-directed IRA money, to place in this group. But when I looked in there, I found that I do not have enough money. So I was like, oh wow, this is not cool. So I called my IRA because I always forget how to put extra money in it. So they were telling me I could either do an wire or an ACH. They let me know that either way I do it, there's going to be a fee involved. ACH for my self-directed IRA is only $5. It's a lot less than the wire. All right. But if I write a check and send it to them in the mail, there's no fee from them. Okay. So far going doing it through writing a check, it'll be the bank will definitely charge me a fee, but the IRA will not. Okay. But here's another situation that arose. I can contribute, meaning even though I put that money in, I'm still going to be short. It's still not enough to be a part of this group. Okay. So they told me no need to worry, no need to fear. There is another way in which I can add money onto that self-directed IRA so that I can be in the group. And it's called a transfer. See, I have another IRA that I opened up many years ago. It only does stocks and bonds, mutual funds, and ETFs. It is not a self-directed IRA. Okay. And he was saying that I can actually transfer the money from there into the self-directed IRA. There's no maximum on how much I can transfer, number one. And there's no tax penalty with doing the transfer. Okay, so I was elated when I heard that. Definitely, most definitely elated. Now I said, okay, well, since that's the case, what about the HSA, my health care savings account? He said, absolutely not. I cannot put the health care savings account into the self-directed IRA because they're not the same vehicle. The IRA is strictly for retirement. Okay, not the healthcare savings account. I can use the healthcare savings account when I'm retired, but I cannot transfer money from there into the self-directed IRA. So I was like, okay, I believe I have enough in my regular IRA anyway because I opened that bad boy up when I was 25 years old. And now I'm 54, coming up on 55 in a couple of months. So I think I'm good to go. All right. Now, I said, well, what about the 401k? Because I'm still working. I still have a job in addition to having my own businesses. So he says, yes, with the 401k, you can, it's not called a transfer. It would be called what? A rollover. And the rollover, there's no maximum. There's no tax penalty. The only difference is this. You have to report it on your taxes that you did the rollover. That's it. Now, Some accountants, they might charge a little bit more money because they might have to fill out another form in order to get this done. But that's basically it. It would be a one time, one and done situation. And that's it. Okay? So, just to reiterate, if you ever find yourself short in your self-directed IRA, you can either transfer another IRA into it or do a rollover of your 401k into the self-directed. And that is great. As a matter of fact, hearing this, knowing this, what I'm decided to do is, what I believe is when you leave your job, a lot of times they always say roll over your 401k into a separate IRA, like an individual IRA. Well, they never really say individual, but that's what they mean. I think it's actually better to roll it over into a self-directed IRA because, see, with the individual IRA, you are confined to just the stock market. But with the self-directed IRA, and again, it depends on which company you use. The self-directed one, you can invest in real estate, you can invest in gold, you can invest in Bitcoin, other precious metals, or anything really, other businesses, anything for that matter. So you have way more flexibility in the self-directed as opposed to just the regular IRA. And also, don't get me wrong, with the self-directed, you can still also invest in the stock market as well. It doesn't have to just sit there at all, collecting no interest. All right. And then, I just thought some of you might be saying, okay, why is it that you wanted to invest with this group in your self-directed as opposed to investing from your bank account? Why? Well, because the self-directed IRA is tax-free money. If I used it from my business bank account, I'd be taxed on any gain that I got. And I'm trying to build up my retirement fund so that when I hit 65 in a few years, and it'll be here before you know it, I would be good to go. I won't have to worry about it. I won't have to worry about, how much money I spend and things of that nature because my money is growing tax-free. However, with the business bank account, I'm not going to get that. So that's why I wanted to do it that way. And then also, I know that with investing in laundromats make a lot of money. And I know that when it hit, Uncle Sam will be there waiting to hit me hard, very hard. I learned that from my last experience a few years ago. So that's another reason why I'm way more active and being proactive in investing in the self-directed as opposed to my regular business bank account. Okay. Which I'm working on actually putting all of that into a trust on top of everything else. So, yeah, that's what we're doing in 2026. That's my goal. All right, guys, I hope that what I shared has helped you make smart financial moves. Feel free to pass this amongst your friends. Oh, and I forgot. Make sure you take the information that I just mentioned and go over it with your financial planner, right? There are free ones. So I don't want to hear that you don't have one when you can go get a free one. And you can also, of course, take whatever paperwork and sit down with the lawyer and have them read over it to make sure that the contracts are correct. All right. So Bye for now. Until next time, have a good night.